a Business Today year-end special, 2021 Business Rewind. It was a year of superlatives. On one side, mind-boggling profits, of markets at dizzying heights, of cryptos racing to unimagined levels, and of startups tapping into the IPO market like never before. But it was also a year of petrol crossing the 100 rupee level, of the pain of unemployment due to COVID, and of rising healthcare bills. We will discuss all this and more in the next half hour. But let's start with a quick look at the state of India's economy. GDP, the big daddy of economic indicators. Let's start with the bellwether indicator. After a muted start in the first quarter of this calendar year, thanks to COVID, the economy really picked up in the April to June period. Part of this was due to the low base effect. The good continued in the July to September period, and the RBI expects the economy to grow 9.5% this fiscal. Now, this effect in the pickup in economic activity was reflected clearly in GST collections. April was the best month, and after a dip in July, collections again gathered pace in October and November. There is even talk that high GST collections could result in some tax ops for the middle class. Speaking of the middle class, the biggest grouse was an increase in prices across the board. However, the official inflation figures stayed within the limits of the Reserve Bank of India, what they had set for the year. The big contributors to inflation, petrol, diesel, and the prices of edible oil. The other figure informally said to be at much higher levels is unemployment. The year started off at 6.5%, and after touching a high of 11.9% in May, fell to 6.9% in October. Now let's talk about currency. The rupee slipped more than 4% against the US dollar this year. The impact? Exports are more competitive, imported goods, including fuel, are more expensive, foreign jaunts and studying abroad is costlier. Last but not least, a look at the Sensex this year. The sensitive index touched a low of 46,286 before bouncing to a high of 61,776 in October, 124% higher than its low in March 2020. However, Omicron fears and profit booking had pushed the Sensex by the end of the year. As we just saw, it was a spectacular year for Indian equity investors. Sensex and Nifty posted their best gains in 13 years. Soaring unicorns, private capex, and significant pickup in the pace of vaccination all added to the buoyant sentiment.
While the markets have been sucked in a whirlpool of trouble at the end of the year, through the year, bulls were a rampage on Dalal streets. The bull run, which started in March to April 2020 after the COVID crash, continued this year. The Sensex started the year at 47,750 and managed to breach the 50,000 mark just about a month later in February. Investors, however, booked profit and the sensitive index touched 47,705 before strengthening again. The crucial 60,000 level was attained on 24th September. The Sensex took 245 days from its 50,000 level to reach here. The index closed at its highest, 61,765 on the 18th of October. The Nifty, which had plummeted the most in a single day, hit a low of 7,500 before reaching the 17,000 mark, all in a span of a year. But what the bull market, with all the hype about Sensex and Nifty hitting new highs, about investors turning millionaires overnight, what the bull market did was attract new investors by the drove. Nearly 3/4 of the existing demat and trading accounts have sprung up since markets were at their nadir in March 2020. While just 50 lakh new demat accounts were opened in 2019 to 2020, 1.42 crore new accounts were opened in the financial year 2020 to 2021. But the figures from this year beat them all. In just 7 months of this fiscal, up to October, 1.87 new traders have jammed the Dalal street. The number of demat accounts added since the start of the pandemic has been eye-opening. Buoyancy in stock market, ease of account opening, shift to work from home has led to the sharp jump in new investors heading to Dalal Street. IPOs by consumer brands has also piqued the interest of people, leading to increased market participation. While investors rush to buy shares in these companies amid the mad IPO frenzy, of late, the fireworks have been dimming. Paytm was the first to sneeze with a dismal listing, and the cold soon spread to Zomato, Nykaa, Car Trade, PB Fintech, whose shares have fallen from the lofty purchase. With markets in turbulent waters, the new retail investors need to brace themselves for a rough ride in the coming days. It remains to be seen how these investors will behave in coming times of volatility and market correction. Bureau Report, Business Today Television.
As the markets overcame the second wave and touched the sun in 2021, we at Business Today TV had some of the most trusted and credible voices to guide us through the volatility. While pessimism sporadically crawled amidst our minds, the most dependable voice, the big bull of the Lal Street, Rakesh Jhunjhunwala, cemented our beliefs in the India story.
हमारा टाइम आएगा नहीं, हमारा टाइम आ गया है. हमारा टाइम आएगा से हमारा टाइम आ गया है अलग है. अब आ गया है. वो बोलता है ना कि मुहूर्त का समय आ गया. हिंदी फिल्म में कन्या को लाइए, तो हिंदुस्तान का मुहूर्त हो गया है. You know what Twain has said, no? What God ordains, even time cannot disturb. What time ordains, even God cannot disturb.
We also brought you enlightening insights and the best bets by veteran investors like Madhu Kela.
Who is to say that some other banks, public sector banks, will not get privatized in times to come? And that's a very, very big event. For they are very cheap. B, they are well provided for. Most of these banks have provided 70-80% of their gross NPL in the last 5 years or so. C, we are clearly seeing a profit and loss account improvement in a lot of these banks. If you see last quarter, and I'm quite convinced the next few quarters will be a positive surprise to the market. So if I put all of this together and if I compare the absolute amount of market cap which is there for public sector banks, I think it makes a very, very good case for a good investment.
As we wrap up the year, a look at some of the biggest deals of 2021. First up, the mega merger of Sony and Zee Entertainment, which promises to change the landscape of Indian entertainment. Sony, which will invest $1.575 billion and will hold a majority 50.86% stake, while Zee promoters will own 3.99% stake. Other Zee shareholders will hold a 45.15% stake. Next in line is the largest acquisition done by an Indian startup. Byju's acquired Akash Institutes in a whopping $1 billion deal. The acquisition will create one of the largest education groups in India. Continuing with the startup ecosystem, PharmEasy bought a 66.1% stake in Thyrocare in the first ever acquisition of a listed company by an Indian unicorn. PharmEasy bought the stake for 4,546 crore rupees. Tata's bought a majority 64.3% stake in grocery delivery app Big Basket, and that's our fourth big deal of the year. That's a massive $1.2 billion. It's expected that the purchase will be a crucial part of the super app that Tata is building. And finally, it was Piramal Enterprises who came to the rescue of the troubled housing financing firm Dewan Housing Finance. Piramal acquired the company for 34,250 crore rupees through the bankruptcy process. The deal everyone was talking about, of course, was Tata's purchase of Air India. Not only did the government get rid of a bad asset, Tata also got back what it had lost to nationalization 50 years ago. Meanwhile, the big disinvestment everyone's waiting for is LIC.
Air India landing back on Tata turf. Just the lift of markets and the industry needed in the post-pandemic gloom. an assurance that the government was true to its word and has the political will to go ahead with the sale of few select public enterprises. The government had set a disinvestment target of a massive 1.75 lakh crore rupees this year. There was skepticism, which is slowly dissipating, especially after the Air India announcement. In fact, if some analysts are to be believed, the final disinvestment amount may exceed the target. The big daddy of them all is LIC. A 10% sale in its equity is expected to yield around 1 lakh crore rupees for the cash-strapped government. Next in line is fuel major Bharat Petroleum, where the government could offload its entire 53% stake for an estimated 75 to 80,000 crore rupees. Companies where the government has divested its stake include NMDC, Axis Bank, Hudco, Hindustan Copper and Indian Petrochemicals. This has garnered 9,330 crore for the government. Along with Air India, sell-off has been approved for Central Electronics, raising the total proceeds to 27,540 crores.
We are into several of these transactions that Honorable Finance Minister listed. We are well on our way. EOIs have been done, bidders are there, they are actively participating, and very soon we should be able to give the RFPs for financial bids for several of them.
That's not all. Faced with massive revenue shortfall, coupled with mounting social schemes bill during the pandemic and increasing frustration among the middle class thanks to the rising fuel cost, the government is stepping on the gas to monetize its assets. For instance, the two iconic Air India buildings, not part of the sale to Tatas, will be monetized to reduce the 40,000+ rupee debt on the company. Earlier this year, the government had approved a national monetization plan of 6 lakh crore rupees, which it plans to achieve by 2025. This will include 1.60 lakh crore by leasing out highways and roads, 1.52 lakh crore via railway assets, 85,000 crore via power assets, nearly 50,000 crore through oil pipeline infrastructure, and 35,000 crore via telecom infra. As per reports, assets worth 88,000 crore rupees have been monetized this year.
Unlike privatization, which is a clear thing, which is you take an asset and you privatize it, monetization can be done in many shades of grey. So the idea here is you take that asset.
Is it hidden privatization?
No, it's privatization of an asset as opposed to a company.
Tough on its resolve, the government will also have to steel itself for political opposition as it gets ready for the big sell-off. Elections in 5 states, including the bellwether Uttar Pradesh and Punjab, are due by March 2022, leaving the government with little political leeway. Bureau Report, Business Today Television.
From Google to Microsoft to Twitter to Adobe, you name it, and Indians are leading these tech giants. As we wrap up this year, here are some of the top Indian CEOs who took the business world by storm in 2021. Parag Agarwal is the newest Indian to join the elite Tech Titans club. After leading the world's biggest microblogging site, Twitter, for 16 years, when Jack Dorsey stepped down, he chose Agarwal to lead the company. Twitter's newest CEO is an IIT Bombay graduate. Not only are Indians leading the tech world, they've taken the fashion world also by storm. Leena Nair is the first Indian to head Chanel, the luxury fashion house. A gold medalist from the Xavier School of Management, 52-year-old Nair is an Indian-origin British national. Back home too, women continue to lead big conglomerates to success. This year, India's first women-led unicorn, Nykaa, made a blockbuster debut on Dalal Street, and Nykaa's market cap hit the 1 lakh crore rupee mark, making its founder and CEO, Falguni Nair, India's wealthiest self-made female billionaire. Home to over 50,000 startups, and 82 of these managed to hit the magic figure of $1 billion in valuation this year. making them unicorns and making India the world's third largest unicorn ecosystem. So as the countdown begins for 2022, let's head across to Karishma Sudani to find out which startups made their mark this year.
In today's world, startups turning unicorns are not rare anymore. And as we celebrate the phenomenal rise of the Indian startup, it was a number of global macroeconomic factors which served as tailwind to help achieve this feat. The global pandemic, which resulted in a digital transformation, China's crackdown on tech companies, and a large pool of private capital, all reasons that the Indian startup ecosystem grew exponentially and produced a record 82 unicorns this year alone. Yes, you heard it right. India has 82 new unicorns with a total funding of over $38.4 billion. This made the country the third largest startup ecosystem in the world this year after the US and China. The year 2021 has emerged as the most successful year in history for unicorns. India's unicorns are currently valued at more than $168 billion, and companies like Bharat Pay, Car Dekho, CoinDCX, Cred, Licious, Spinny are just some of the names who have entered the Indian Unicorn Club. Baiju tops the valuation at $21 billion. The listing of Zomato, Nykaa, Policybazaar and Paytm were a big boost to the startup ecosystem, as it showed that India can have an exit path to investors. Interestingly, every second founder of Indian startups that turned unicorn this year are IITians. So if you are one of those who aspires to build $1 billion business in the future, then getting into one of the IITs should be your aim. However, just an IIT Connect will not build the unicorn for you. What you will also need is oodles of luck, even more effort, a fantastic and a really hungry team, and a steady pipeline of funds. And it seems there is enough talent and opportunity in India, because heading into 2022, it is predicted that India will have more and more startup success stories.
While this has been the year of new age businesses, with many going the Dalal Street way and many others turning unicorn, but are these businesses here to stay? Who will make it to the end of the race? Will some of these companies perish along the way? Policybazaar's Yashish Daya had this to say when we asked him the same.
There's a lot of unnecessary euphoria. I have zero doubt there. I'm myself somebody who is as much a pessimist as an optimist. And I do see a lot of people having unnecessary euphoria. In fact, I would even go to the extent of saying some people may be investing because investing is profitable, because they make money every time they invest. So I think there's a lot going on in the world. There is a lot of capital, and I think there will be interesting situations. But then who are we to say? Sometimes these lack of interesting situations carry on for so long that they make the interesting outcome, which, you know, rational people believe are going to be there, sometimes impossible.
Not only did the number of unicorns shoot up this year, a record number of startups garnered huge amounts of funding. But are these companies profitable, and what kind of revenues are they clocking in? What's making investors bullish about these companies? Listen in to Cred's Kunal Shah.
We are a 2.5-year-old company, and I think at the right time we'll talk about revenue projections. We are very, very early in our journey, and we would prefer to kind of focus on the user experience than just kind of obsessively focus on revenue and profitability at this point of time. We have very supportive investors who are playing along with us and saying that, hey, if we can get the right kind of experience for the right kind of customers, monetizing this cohort is not difficult.
And who can forget the biggest craze of the year, that of cryptos? Cryptocurrencies were unmatched channels of greed and FOMO in the year gone by, and everyone wanted to jump in the deep end. Watch this report as we map the journey of cryptos in 2021.
We are very clear that we are not shutting all options off. We will allow a certain amount of a window for people to use, so that experiments in the blockchain, the Bitcoin, or whatever you may want to call it, the cryptocurrency experiments and fintech, which depend on such experiments, will have that window available for them. We are not going to shut it off all.
अभी नया बिल ऑलमोस्ट तैयार है, वो जाएगा कैबिनेट के पास और कैबिनेट के क्लियरेंस के बाद में हाउस में आएगा, ये जरूर मैं कह सकती हूँ। फिनटेक इंडस्ट्रीज में भारत में अच्छा एडवांटेज है, हमारा युवाओं का बहुत इंटरेस्ट है। ये टेक्नोलॉजी के ऊपर बहुत सारे लोग का उनके अपने रवैया भी है। ये सब संज्ञान में लेते हुए ही हमारे बिल तैयार हो रही है।
Two statements from the finance minister, 9 months apart. Statements which sent hopes soaring that the saga of cryptocurrency regulation, which began in 2019, will finally conclude this year. Even the signals out of the PMO were encouraging.
Take cryptocurrency or Bitcoin, for example. It is important that all democratic nations work together on this and ensure it does not end up in wrong hands which can spoil our youth.
This would have been great news for the 15 to 20 million Indians who are said to have invested anywhere between $6 to $10 billion in cryptocurrencies. What's important is that most of these investors are youngsters, driven by greed and desperation in times of COVID, when jobs and sources of income were scarce. A news break from Business Today TV in the last week of October was the push crypto players and investors were looking for. There was finally hope that a law would be in place to regulate the crypto space and protect the interests of investors. It was in the middle of November that action accelerated. Prime Minister Narendra Modi chaired a high-level meet on cryptocurrencies, followed 2 days later by a meeting of the Parliamentary Standing Committee on Finance. Then, on the night of 23rd November, came the big twist. News that the crypto bill was on the Parliament agenda and it planned to ban cryptocurrency. The reaction was instant. Cryptos plunged. Hundreds of crores were wiped out overnight. The panic was stemmed only the next day when government officials clarified that only a regulation was under consideration. Resistance to cryptos, however, continued. Banking regulator RBI made it clear that it was dead set against cryptos in any form. It instead pushed for its own central bank digital currency.
The technology can grow and will grow without cryptocurrencies or whatever name you use to describe cryptocurrencies. When the Reserve Bank, after due internal deliberation, says that there are serious concerns on macroeconomic and financial stability, there are deeper issues which need much deeper discussion, much more well-informed discussion.
The government finally ended up backpedaling on the crucial bill. End of December, it was considering reworking the proposed regulation and preparing it to be tabled in the Parliament in the budget session next February. Sources told Business Today TV that the delay is on account of discussions at the highest levels of government on key issues like private cryptocurrencies and global practices. Investors and players alike were hoping for closure this year. But as the new year beckons, they are left wondering when the sun will rise on the law to regulate cryptocurrencies. Bureau Report, Business Today Television.
We hope you enjoyed this special edition of Business Today TV as we rewind 2021. Do have a wonderful holiday season from all of us here. Thanks for watching.